Conditions continue to improve in the manufacturing sector. The ABSA Purchasing Managers Index rose for a third quarter month to reach 57.4 index points in March from 53 the previous month. The increase was supported by the improvement in the 5 subcomponents of the index, with only the employment index still below the neutral 50 index points, indicating weakness in the job market. Respondents reported solid improvements in new sales orders, indicating an improvement in demand.
It was another really good month for the manufacturing sector, which in a way was a little bit surprising, given that we had about 10 days worth of load shedding during March, which we'd expected that would have caused some disruptions in the sector. But nonetheless, the signal that we're getting from the PMI data is that there was actually generalized improvement in the sector. We saw a strong improvement, not just in output, but also in new sales orders. The sense we're getting is that exports have also started to pick up a little bit after some slowdown late last year and also a little bit early this year. I think that's a really encouraging sign. But we also do feel that there is some domestic momentum that is coming specifically from the mining sector, which has, of course, benefited from much higher export commodity prices, but also the agricultural sector that has, some parts of it at least, that are doing really well right now in terms of output. So we think that there are some spillover effects into those areas towards some part of the manufacturing sector. Another area that we found a little bit concerning in the data is that input costs do seem to be continuing to rise. That particular sub-index did increase to a 5-year high in March. We do suspect that part of this is related to the fuel price hikes that we've seen. And I think if you just think about the fact that we are, of course, going to see some big electricity tariff increases, and the fact that we're going to see another fuel price increase next week, that we could see these input costs just continue to mount for manufacturers in the months to come. But positively, I must say, so far we're seeing very little evidence that these cost increases are being passed on to the consumer.
Well, now to delve in deeper as to what's happening on the markets picture, we'll just cross and have a look at what's happening on the Asian front. The Hang Seng Index closing at 1.9%. And interestingly, there over in Hong Kong, we did have some of the companies trading on that particular stock exchange been halted from actual trading. And this was on the back of the delay in the publications of their financial numbers. The Shanghai Composite up 0.7%, that territory of markets also advancing in the day, and of course the Nikkei also in positive territory. Looking at what's happening on the European side, we've also had a raft of data coming through on that front, and the kind of data that's going to come through will give an indication for investors to get a sense as to what is happening with the EU economy, the state of health of the economy. Looking at stuff on the US side, of course, we had the futures right now. They're pretty flat, and this is as Wall Street, of course, hopes to continue that strong march with, of course, President Biden's multi-trillion-dollar infrastructure plan. Looking at what we are currently unfolding on the JSE front, we're going to get into that picture a little bit more specifically with Nessa Naya, who is our broker. But the currencies right now, 1470. That is the dollar, the euro at around 17.25, and of course the pound 20.25. That's where it's sitting right now. We're going to get into various aspects of the other markets, looking at what's going on in the sectors. We do have Harmony, First Brand, and of course Naspers also in positive territory right now. But to get a proper indication of what's going on in the markets, we are joined by Nessa Naya, who is from SASFN. Nessa, thank you so much for your time this afternoon.
Yeah, thank you. It's been a fantastic run that we've seen today on the market. Of course, the big news, Naspers up 5%, Naspers and Prosus up quite a lot on the back of their big holding in Tencent. That stock was up 7% on the Hang Seng. And I suppose, when Tencent is up in that kind of magnitude, you can only expect Naspers and Prosus to follow, and that's holding the whole market up. Of course, the other big news story out, PPC continues its upward trajectory. That share not so long ago, about a week or 2 weeks ago, was about R1.70. It's now close to double that, closer to R3 actually. On the back of the news that they are probably not going to need another rights issue, and as a result, shareholders viewing that as being very positive. So generally, the manufacturing numbers you spoke about has helped some of the SA Inc. shares pick up this morning, but it's still a tough environment out there, I think, for the SA Inc. shares. But generally, I think the mood today has been very, very positive.
All right, let's talk about PPC a little bit. I mean, when you look back at it over the past, say, 10 years or so, or probably even longer, depending on how long you've been active in the market, I don't want to put an age or a number to your age at all, but what would you make of the performance of PPC over the past few years? I mean, where it is right now compared to where it was, there's a big difference.
Absolutely. I also don't want to give my age away, Tash, but I remember PPC being in the mid-30s, and not so long ago, actually. Just post the construction boom that we saw in before the World Cup in 2008, 2009, 2010, roundabout then. It was also an excellent dividend payer, and it's been as low as sort of in the mid, sort of, I think it was at 50 cents or 40 cents, not so long ago, last year actually. Subsequently, a lot of concerns that the sustainability of the business was not intact and the business model needed to change. It went on a massive drive into the rest of the continent, which didn't really pay any benefits up front. But credit to management, they've been dealing with that, not dissimilar to Sasol. There were suspicions that there was going to be a massive rights issue. They were going to go to the shareholders and ask for more money, which would have the effect of diluting profits once again. But that didn't actually happen. And even though the market is forecasted to happen, it's likely not going to be as severe as what the market initially anticipated. And that's why you're seeing, the strong rally now. Almost every day this week, that share has been going up. And it's been a solid purchase. There have been big volumes. I remember yesterday, an hour into the trading, there were more than 10 or 12 million shares that had changed hands. So that just gives you an indication that shareholders may be looking at this a little bit more positively than what they did a few months ago.
Nesson, it's a new month, new quarter. What pieces of information or data, depending on, whether you're looking at it from a South African, Europe perspective or even US, that you'll be keeping an eye on to give you some kind of idea as to how this quarter might play out?
Yeah, I know you say that on the back of a very strong first quarter, and the JSE was up 12%, and we obviously like to see that momentum continue into the next quarter and to the rest of the year. But if you're asking me what we need to see happen, I think you already mentioned that jobs number. That jobs number needs to start improving. The local employment environment needs to start improving in South Africa. And I think we're only going to see that happen, once the vaccine deployment is out in full force. So we're going to look at, specifically in South Africa, how many people are being vaccinated on a daily basis and how the implementation of vaccinations are taking place and how successful they've been. And of course, on how quickly companies resume, their growth trajectories. It seems like from the manufacturing data out today, it's encouraging to see it edge towards the 60 number. I think that's very important. But largely, I think a lot of companies are still in some form of lockdown or slowdown or whatever you want to call it. Once that environment starts changing, you can be rest assured, that the economy will start showing a big pickup. So that's, I think, something a lot of us are looking forward to seeing.
Nesson, let's leave it there. Thank you so much for your time this afternoon. That is Nesson Nair. And speaking of things that we're all looking forward to see, we were all talking about President Biden's stimulus package. Of course, he's saying it is an ambitious one, and he's hoping to fund that with an increase in corporate taxes in the U.S. from 21% to 28%. Everybody anticipating at least some kind of a popcorn movie moment at that particular time in Congress. So we'll see how all of that plays out. Up next, we've got the labor force with